Assalamualaikum and selamat sejahtera to everyone. First of all, let me introduce myself. My name is Nurhanis Atira Zafirah binti Muhammad Rafi, and today our group consists of 6 members, which is Hayati, Soleha, Ayu Junwana, Ashfarina and Salsabila. We're gonna present to you guys our assignment topics, which is financial performance analysis and Mfrs compliance. Also, we would like to thank you to Dr. Wan Amalina for giving us this opportunity to present to you guys our topic. So, please keep on watching.
Hi and Assalamualaikum to everyone. Okay, my name is Nur Ashfarina binti Ahmad Bukhari. I would like to present the part A of profitability of the company, which is we choose company Star Media Group and also Asian Media Group. So, gross profit margin is the ratio is to measure of the markup percentage of sales. This ratio will increase if someone is adjusting revenue-related fraud by using a scam that could overstate sales or understate some discount or sales return. When gross profit increase dramatically, sometimes inappropriate is going in the company. Next, we move to the net profit margin achieved by selling a company's product. This assists in understanding the company's pricing structure, overhead structure and also profit level. This ratio should be fairly consistent. Somehow, the return on profit is also under the profitability, which is ROE is the amount of return on net income as a percentage of shareholder equity. It is a measurement of a company profitability by revealing the amount of profit. Okay, we move to the next, which is Star Media Berhad. Okay, the company has increased their net profit from 5,459,000 at the year 2018 to 5,721 at the year 2019. They have increased the net profit margin for 2.6% from 2018 to 2019. Besides, in the case of the gross profit margin, the company has increased for about 10% from 45% to 53% at the year 2015 to 2018. So, the Star Media has also earning, as we can see that their net profit margin show a negative value. Asian Media only provide 0.6125% for every 1 ringgit its shareholder invest, compared to the year 2018, which is 70% of every 11 ringgit.
Based on the chart of Star Media Group Berhad, their company current ratio show that the company have ability to pay debt due within 1 year out of the company current ratio. Star Media Group Berhad quick ratio show that the company able to pay its current liability without needing to sell its inventory. As for cash asset ratio, a ratio above 1 means that the company will be able to pay its current liability using cash and cash equivalent. The ideal inventory turnover ratio rate is about 4 to 6. It means that the rate at which company restock item well balanced with their sales. For Asia Media Group Berhad, current ratio less than 1 means the company may have problem meeting its short-term obligation. A low quick ratio is generally risky position since the company doesn't have enough current asset or without inventory to cover their short-term debt. Asia Media cash asset ratio is less than 1. It means that the company doesn't have enough cash and cash equivalent to pay off their current liability. For Asia Media Group Berhad, there is no turnover.
Okay, next we move to the solvency ratios. First of all, what is solvency ratios? A solvency ratio measures the extent to which assets cover commitments for future payments and the liabilities. The solvency ratio of an insurance company is the size of its capital relative to all risks it has taken. So in solvency ratio, we got two ratio, which is debt to equity ratio and the interest coverage ratio. Okay, we move to the first ratio, which is the debt to equity ratio. Let me see our first solvency ratio for Asia Media Group Berhad. We can see that from the years 2017 to 2019, the debt ratio is increasing, which is from 10.90% to 1,259.27%. So as we can see from the slide given, a high debt or equity ratio generally indicates that a company has been aggressive in financing the growth with debt. So this can result in volatile earnings as a result of the additional interest expense. If the company's interest expense grow too high, it may increase the company's chances of a default or for a bankruptcy. Next, let's take a look with the interest cover ratio for Asia Media Group Berhad. Okay, so from this graph, from this slide, we can see that in 2017, the interest cover ratio is 57.56 times, and 2018 it's no interest cover ratio, and also 2019 we get negative 1.99.68 ratio. That means it's no interest cover. So otherwise, in Star Media Group Berhad, we can see that the interest cover ratio for the year 2017 is decreasing from 6.11 times to 4.52 times from 2017 to 2018, and it's become increased from 4.52 times to 12.14 times in the year of 2019. So between this company, we can obviously see that Star Media Group Berhad is really better than Asia Media Group Berhad. Typically, one problem that only reviewing the total debt liability for a company that they do not tell you anything about the company's ability to give the service for the debt. This is exactly what the interest coverage ratio aims to fit. So let's take a look again. This ratio, which is the total operating income divided by interest expenses showcases the ability for the company to make the payments. Generally, a ratio that 3.0 or higher is desirable, although this varies from industry to industry. Okay, now we move to the question number 4. Okay, first of all, what is financial statement fraud? Accounting fraud means that deception or misrepresentation from an individual or entity makes knowing that the misrepresentation could result in some of unauthorized benefit to the individual or to the entity or with the same party. So, financial statement fraud can make multiple forms, including overstating revenues by including future expected sales, inflating an asset's net worth by knowingly fail to apply an appropriate depreciation schedule. And the third is hiding obligations from company balance sheet. The last is incorrectly disclosing related party transactions and structures finance deals. Comparative ratio analysis help to analyze and auditors spot accounting irregularities. By analyzing ratio, information regarding disease in the receivables, leverage multiples, and other vital metrics can be determined and analyzed for inconsistencies.
Okay, we have discussed and identified some potential fraud indicator of financial reporting in the company of Asian Media Group Berhad compared to the Star Media Group Berhad. We know that Star Media Group Berhad has achieved their profit margin, which we can see their net profit margin is increased by the year 2018, which is 2.3%, to 2019 they achieved 4.6%. Okay, we can see in the Asian Media Group Berhad, they have decreasing year by year in their net profit margin. Okay, for the Asian Media Group Berhad, their cash flow from operating are negative and have lag significant behind reported net income, which we can see they have no net income in the year 2019, and this ratio can be seen in the gross profit margin, which is the company could not achieve any profit for the year 2019 and they only provide 0% for 2019. The external auditor also has unable to satisfy themselves that opening balance does not contain misstatements that may materially affected to the company. So we have found some potential fraud indicator in the company Asian Media Group Berhad, and they need to recover and discuss about this method to increase their net profit from year to year.
The fraudulent or financial reporting, Asia Media Group cash flow form is negative or significantly lag. There is also unusual changes in inventory. This is not a guarantee that fraud is occurring, but if it do, this kind of sign may be the sign that we should keep our eyes to.
Part B, Question 1. Disclosure Index on companies conformant to the MRFS. For operating segmental MRFS 8, Disclosure Index means measure the extent which investors are being protected through disclosure of ownership and financial information. Meanwhile, operating segment is component of an entity that engage in business activity which earn revenue and incurred expenses. The operating segment in disclosure index is require good rule and regulation or stricter enforcement that are efficient, accessible to all who need to use the financial information. Disclosure index in Star Media Berhad is higher than Asia Media Berhad as the investor financial information and ownership being protected because has more crucial data and important data that exposed to the user. Next, question 2. Comment companies compliant to the MRFS. For operating segment, company should disclose information to enable user of its financial statement to evaluate the nature and financial effect of business. For Asia Media Berhad, at the end of 2019, have two business segments, which are advertising and plantation. The revenue for advertising greater than the plantation, which are 75,000. The segment plantation are not operate in 2019 and need to disclose the information. The company have disclosed segment revenue, liability, and asset. The company also disclosed how operating have been identified. The company also disclosed the product and services that provided by them. The company did not disclose the reliance of major customer and geographical information. For Star Media Berhad at the end year 2019 have 4 business segments, which are print and digital, radio, event and exhibition, and television channel. 3 segment revenue greater than 4% of the total revenue, which is 300 million, which are print and digital, radio, and event and exhibition. The television channel not operate in 2019 and need to disclose in financial statement. The company has disclosed segment revenue, profit loss, liability, and asset. The company disclosed how the operating segment has been identified. The company disclosed the product and services that they provide. Did not disclose the reliance of major customer and geographical information. As conclusion, Asia Media Berhad and Star Media Berhad has disclosed most of disclosure required by MRFS 8.
Okay, my name is Nora Salsabila Mfrs. My matrix number 050160. Today I would like to present about foreign operations under MFRS 121. MFRS 121 is equivalent to IAS 121, the effects of changes in foreign exchange rates. Under this IAS 121, it is issued as amended by the IASB, International Accounting Standard Boards, that is including the effective and issuance dates. This entity is comply with IAS 21. To apply MFRS 121, the entity should be, there is 2, accounting transaction balance and balances in foreign currency and translating the financial statements of foreign operations to include in the consolidated financial statements. And then I will start to tell you about what is the meaning of foreign operation. Foreign operation is the meaning of subsidiary, associate, joint venture or branch of a reporting entity, the activities of which are based or conducted in a country or currency other than those of the reporting entity. To determine the functional currency of the foreign operation is the main issue in the relation to the translation of the financial statements of a foreign operation. The method of translation and treatment of exchange differences are determined by whether the functional currency of the subsidiary is that of the parent or not. And then the company that we do is under Star Media and Asia Media. Okay. Based on the statements of profit or loss and other with Star Media comprehensive earnings in 2019, it has a high profitability over Asia Media, which suffered significant losses that year. The amount of exchange differences recognized in profit or loss, the amount exclude the difference arising on financial instrument. that is measured by at fair value through profit or loss, accordance with IAS 39. So in dealing with foreign operations, the entities have to determine which exchange rates to apply, record and present the items in the financial statements. Okay, then I would like to provide some comments on Asia Media and Star Media that complied with MFRS. Okay, first, we know that the objective of IAS 21 is to prescribe how to include foreign currencies transactions and foreign operations in the financial statements of an entity and how to translate financial statements into a presentation currency. So, between Asia Media and Star Media, Asia Media is not disclosed how the foreign currency was used in more detail. Unlike Star Media, there are more references to foreign currency use, such as Ringgit Malaysia, Singapore dollar, United States dollar, and British pound. In the financial statements of Asia Media that have been prepared under historical costs, historical convention, and modified to include other basis of valuation as disclosed in other sections under significant accounting policies into financial statements. For Star Media, the accounting policies adopted are consistent with those of the previous financial year, except the effects of adoption of new MFRS during the financial year. So for we know that Asia Media used the Ringgit Malaysia and does not disclose how it was used. So in financial statement 2019, Asia Media translating all amounts at the last exchange rate, that is called convenience translation, because the financial information generated does not comply with all IFRS, especially IAS 21. When the convenience translation happened, disclosure clearly identify the information as supplementary information to distinguish it from the information that complies with IFRS. Disclose the currency in which the supplementary information is displayed, disclose the entity's functional currency and the method of calculation used to determine the supplementary information. For Star Media, the sensitivity analysis of Ringgit Malaysia against foreign currencies at the end of the reporting period, assuming that all other variables remains constant. We know that in the financial statement in Asia Media, there is loss that suffered in the company. That is, base loss per share contains 0.013. For depreciation per share, 0.0103 also. But for Star Media, the effects of 3% changes to Ringgit Malaysia against foreign currency only on United States dollar and Singapore dollar only. The exposure of the other currencies are not significant, hence the effects of the changes in the exchange rates are not presented and amount was immaterial disclosed. Okay, that's all from me. Thank you.
According to Mfrs 1 to 4, simplify the definition of related party, clarify its intent, meaning the eliminate inconsistency from the definition. The change of current practice, among others, include the partial exemption from disclosure for government-related entities. It requires disclosure of related parties transaction between government-related entities only if the transactions are individually or collective significant. Who related parties? A related party is a person or entity that is related to the entity that is preparing its financial statement. First, a person or close member of the person family related to reporting entities if the person has control or joint control over the reporting entity. The person has significant influence over the reporting entity, and the last, that the person is a member of the key management personnel of reporting entity or parent of the reporting entity. Second is an entity is related to reporting entity if any of the following conditions apply. First, the entity and the reporting entity are member of the same group, which means that each parent, subsidiaries, and fellow subsidiaries is related to the others. Second, one entity is associate or joint venture of the other's entity, or an associate or joint venture of a member of group which the other's entity is a member. Third is both entities are joint venture of the same third party. And the last one is one entity is a joint venture of third party and the other's entity is an associate of the third party. Asia Media identification of related parties and consider it to be related to the group if the group is ability directly and indirectly to control the party or exercise significant influence over the party in making financial and operational decisions, or vice versa, or where the group and the party are subject to common control. Related party may be individual or others entity. Related party of the group include direct subsidiaries, indirect subsidiaries, and the key management personnel, which comprise persons including the direct of the company, having the authority and the responsibility for planning, directing, and controlling the activities of the company directly or indirectly. Star media identities of related parties are considered to be related to the group if the group has the ability directly or indirectly to control the party or exercise significant influence over the party in making financial and reporting decisions, or vice versa, or where the group and the party are subject to common control or common significant influence. Related party may be individual or other party. The company has controlling related party relationship with its direct and indirect subsidiaries. Related party of group include direct or indirect subsidiaries as disclosed in Note 8 to the financial statement. Associate as disclosed in Note 9 is financial statement. Companies in which certain directors have financial interests and key management personnel who are defined as those persons having authority and responsibility for planning, directing, and controlling the activity of the group either directly or indirectly. The key management personnel include all the directors of the company and the certain members of the senior management of the group.